Go ahead and start recording. And okay, all right. Okay, so welcome to Tuesdays at 2. I'm going to start out just by telling you a little bit about SCORE. So SCORE is for the life of every business. We have mentoring and resources to support you from business idea to business exit. If you're not familiar with SCORE, the organization was formed in 1964. We are a resource partner of the U.S. Small Business Administration. And our mission is to foster, whoopsies, let's not do that. Our mission is to foster vibrant small business communities through mentoring and education. Our vision is that every person has the support necessary to thrive as a small business owner, and our client's success is our success. That's one of our core values. So how does SCORE help small businesses? We provide free business advice and mentoring. We offer low or no cost business training. And we have lots of free business templates and resources available for you. SCORE is a volunteer organization. We have over 10,000 volunteers and serving clients in over 1,500 communities. So let me give you a little more info about how SCORE might be able to help you. First of all, our mentoring services. If you're an aspiring entrepreneur, an existing entrepreneur, you can get free business advice from expert advisors who want to help you succeed. We'll match you with a mentor that meets your needs. And we can do that face-to-face, we can do that online, in the local office, email, video conferencing, whatever works for you and your mentor. Wherever you are in your business, we have a mentor that can help you. Benefits of mentoring. You're going to get specific resources you need through personalized one-on-one mentoring. You're going to learn from somebody who's been there and done that. Know that you have somebody that you can call on when you have questions or need advice or help forming a strategy. And we have a proven track record of helping businesses start and succeed. We helped over 29,681 new businesses in 2019, and yours could be the next success. We also do local business workshops and events, just like the one you're in right now. These are led by SCORE volunteers, community volunteers, and we do them on a variety of topics that meet the needs of our business community. And just to let you know, coming in March, our Tuesdays at 2 webinar series will be refinancing a business loan with Chris Bushjost. He is an SBA Business Development Manager at Oak Star Bank. And like usual, that'll be on the second Tuesday of the month, March 9th from 2 to 3 p.m. You can find information on that at swmissouriscore.org, clicking on local workshops to register. And we also have tools available 24/7 on our website you might not be familiar with. So if you're looking for any kind of business information, the SCORE website is going to be a great place for you to go. There's resources, live webinars, recorded webinars, courses on demand on all kinds of topics. And also want to put out a plug for volunteering with SCORE. You can help make a difference in the business community. As a SCORE volunteer, you might be a mentor, you might assist with workshops, you can become a leader in our organization. It's a great volunteer opportunity, whatever your field and whatever your passion, we have a role that you can help fill and make a difference in the community. If you'd like to contact us about any of those opportunities, you can visit swmissouriscore.org, or if you'd like to volunteer, you can go to score.org/volunteer. Or you can just reach out to Mary right here on the call and she will hook you up. So we'll go ahead and introduce our speaker today. It's Michelle Goldsberry. Michelle is a proud native of Kansas. She graduated from Fort Hays State University with a Bachelor's Degree in Accounting and Business Administration. She joined PSC Accounting in 1998 and shortly after became a valued partner. She received her accreditations from the IRS as an enrolled agent in early 2003, and she continues her education each year to be diligent on the latest tax law and regulations. She's a member of the Missouri Society of Accountants and the National Society of Accountants, and she's one of SBJ's 2020 Trusted Advisors in Accounting. Personally, she works to be an active member of the community by involving herself in various local nonprofit organizations and leads a very active life with her husband and children. I'm sure a lot of us are have children in the background today with everybody being off school, so we'll enjoy that, I'm sure. All right, I am going to stop sharing my screen. Give me just a moment. Okay, hey everybody, now I can see faces. Again, if you hopped on the call after I started talking, if you have questions, please feel free to throw them in the chat, or you can use the raise hand feature and talk to Michelle directly. We're going to do this kind of casually. This is a Q&A, so it's going to take the direction based on the questions that we got submitted in advance and the questions that you all have. So please do jump in if you have a question. Michelle, how are you?
Hey there. I'm so excited. Score is great, by the way. I'm a fan. So it has helped so many businesses.
Yeah, thank you. Thank you for being here. We sure appreciate you, particularly in tax time, taking an hour out of this busy time of year to be here and answer our questions. I know that that is a pretty big deal. So
we're hoping you'll action to celebrate and hands clapping, and is there one
right
that's
on
crazy as well, I think, right?
Yes. Yeah, where's that one? The crazy
there it
one.
Is.
Oh yes, okay. So we're gonna make sure you don't regret this. We're gonna have so many brilliant questions for you, and you're gonna make such a huge difference here today that you'll forget that it's tax time. And
oh, we had great questions already coming in. I'm very excited. It's all good.
All right. Well, let's go ahead and get started. I'm going to start with some of the user submitted questions we had.
Okay.
So the first one was, what is the best app or program to track your earnings and self-employed taxes?
Okay, so obviously there's some great ones out there. QuickBooks is a leader in the app and the software industry, obviously. QuickBooks sometimes can get expensive and a little overkill. So there's a great app that you could check out. It's called Clarity Money or Mint. They both track income and expenses, and they both do invoicing if you're just looking for something simple. Maybe you don't need the QuickBooks in detail of what it offers or want to pay that monthly fee every month, but there are some free ones out there. And one good one to look at, because most self-employed people use Mileage all the time. Mileage IQ is a great app to have on your phone to swipe left for business and right for personal, so that you can keep track of all that mileage for your accountant.
Great.
I'm going to have follow-up questions probably on a lot of this. And that's a really great one to start off with.
Of course you do.
I've been teasing them. I have an endless vault of questions, and all of you out there who know me, you know that's true. Endless vault. So I get this question a lot. Everybody wants to know QuickBooks, which is why this question probably came up immediately. I've always used Wave Accounting. Are you familiar with that at all?
I've heard of it, and I've had people use it. I think everybody should find what works for them, because like QuickBooks does not work for everybody, even though, because it's not as simple as one wants to assume. And some people just have, quick invoicing, a couple checks a month. I mean, QuickBooks would be overkill for them. So I've even had people use just spreadsheets for keeping track of their stuff as well.
That's what Kay said on here. What about Excel?
Yeah, Excel works great.
Can you talk about some of the different features that maybe when you're starting out or even going to the next stage, like you should ask yourself? You mentioned a couple of them. How often do I do invoices? Do I have payroll? Like, what are some questions we should ask to help us decide what's best for us?
Well, I mean, the payroll would be an issue. If you are doing payroll and you're trying to do it yourself, you need to find one that focuses on that, because the taxes and the quarterlies need to be done as well. If you are just tracking dollars and cents on day in, day out, and you don't want to balance a checkbook register or anything, Excel works great. If you have very few transactions, but they're just larger transactions, maybe that works for you too. Or, maybe you just need the software just for invoicing and you still balance your check on paper. There's plenty of people that do that too. So, you have to find what works for you, what does not take your time, because you don't want it to overwhelm you. You just want it to be helpful. So if it's not helpful, it's not the right thing for you.
Thank you.
Great. I'm going to take a question from the chat here. Brent asked, his wife and he have a small business in the area. How do we best set things up to make the IRS happy with the way we draw a percentage of the income for a monthly household income? And at what point do we need to file quarterly reports for the IRS? He says his wife operates the business with no other employees.
Okay, is she like a sole proprietor, I would assume? As far as the IRS is concerned, as long as you're a sole proprietor, that profit that you have is your money. So if you're not set up as a S Corp or a partnership, there's no guidelines as far as how much you need to draw from that business, because you're going to pay taxes on whatever profit you have as a sole proprietor or a single member LLC. To keep the IRS happy, you have to show, reasonable amount of income every year, because if you keep showing more and more deductions with little income, you might get a looked at. But I would say, however they're structuring it, to keep it clean, keep business stuff in the business checkbook and then do a transfer to their personal account.
Okay. Yeah, I didn't know if there was a specific form they wanted used to spell all that out and take the same percentage every month or any of that kind of stuff? Or
no, because your business sales are not going to be the exact same every month, I wouldn't assume.
Right.
So is she a sole proprietor?
Yeah.
You guys are sole proprietors? Yes. Yeah. Your profit is your income. So if you want to move all of it over, that's great. If you want to, at the end of the month, leave just enough in there for expenses of the business, that works too. You just have to make sure you're tracking your expenses, because your profit or what you move over to your bank account may not match what the profit is shown to the IRS, because you have other things like depreciation and mileage.
Yes, that's true.
Yeah. Yep.
Yeah, thank you.
You're welcome. Thank you.
Okay, thanks, Brent. Another question that we had submitted earlier, it says, last October, I decided I'd try selling on Amazon. Between courses, supplies, and investment in inventory, I accumulated expenses. I didn't set up my business until late December. All the expenses were output before I set up the business. How will I claim these expenses? Okay, you can still, I'm assuming they set up as a sole proprietorship. The inventory will go on and just be held as costed, it's not cost of goods until it's sold. So it'll go on the return just as inventory. But the expenses that, startup expenses like the courses and the supplies, all of that will be ordinary expenses this year against whatever profit they did have in December. Or, just starting out, there may not have been any income, but they can still take those expenses getting their business ready and set up. That's good to know. Another question that we had submitted in advance. Yeah.
Concept thing. So Michelle, when you have starting out a business, a lot of people have larger expenses that perhaps are better off served being depreciated. Can you explain for sort of the newbies and those of us who are not accounting and tax minded, like how do we determine what needs to go for depreciation versus just claim on your taxes kind of thing?
Larger purchases are always depreciation. They can be expensed if you have the profit, but normally I say anything above $300. And as far as equipment or something that's maintainable, not like expendables, like pencils, paper. You can spend a bunch on that, but it's gone. But like equipment or, phones or machinery, all of that stuff will be depreciated over, 5 to 7 years, depending on what it is what industry you're in. Depreciation, if you have profit, you can always expense off more than that year, then you want to continue carrying forward, or you can carry it forward and help you out every year.
That was a good question, Mary. Let's take one from the chat. Actually, Karina has a question. She said, are there any loopholes to not have to pay unemployment, FUTA, and SUTA since we are the only employees but our owners? She says they're an LLC filing as an S Corp.
LLCs as S Corp will have to pay unemployment and federal unemployment on themselves because they can draw unemployment if they are ever out of a job or close business. So the only way to get around paying unemployment would be to move yourself to a sole proprietor, and then your spouse cannot draw unemployment so that you don't pay unemployment in on them. But as an S Corp, the way they're set up, they will pay unemployment taxes as well.
Okay. I know there were some changes in the state of Missouri about like workman's comp. And so since we are the only employees, we don't necessarily have to carry workman's comp. And I think that changed a couple years ago. So with everything changed, I just wanted to make sure that there wasn't something we were missing.
No, workman's comp is different. The unemployment taxes, unfortunately, as an S Corp, you can't get around them. I've tried.
Yeah, I don't, I don't ever see myself filing unemployment on myself. So,
well, maybe, you never know. You could have some slower times, or, the business could be sold for, millions and billions, and maybe you'll be out of a job for a while.
There you go.
Katie, I got something on this, and
Yeah.
I'm going to follow up. So Karina, you bring up something super important that I hear a ton. What are the tax implications of filing of registering your business as an LLC versus as an S Corp? Benefits, negatives. We get a lot of people who say, do I need to be an S Corp? Do I need to be an LLC? Like, what does it look like? Taxes? I always say, talk to your accountant. So what are
honestly, you could spend a whole hour talking about this because it's different for everybody. So like I always tell people, if they have enough in sales that it warrants putting yourself on a payroll and having those extra payroll costs and payroll taxes, then you may want to look at an S Corp because you're making enough money that it may make a difference in the self-employment tax. Because what you're saving from moving from a single member LLC to an S Corp would be the self-employment tax on the portion that you're not taking as payroll. It gets wonky in there, but say like you're making 100,000 and you want to put yourself on a payroll for 60,000 through an S Corp. Well, then on the other 40,000, it's your money and you can take it, but you don't pay that self-employment tax on it. Whereas if you're a sole proprietor, you pay on the whole profit, the whole 100,000. So it can save you a little bit here and there with the self-employment, the Social Security and Medicare tax, but you really need to look at if your structure warrants it. Because I mean, if you're making $30,000, $40,000 as a little side business, it's probably not beneficial for you to become an S Corp and file all the payroll quarterlies and have all of the additional tax implications that you have being an S Corp.
Would you say that there's potentially a threshold of where, and Karina, I'm sorry, I mean,
that's okay.
A threshold where businesses should start looking at? Is it 100,000? Is that sort of the guide? Or
I would say it's probably around 100,000, but it really depends on what their expenses are too, because they could have a business that they're making 100,000, but they already have 80,000 of expenses and they're only bringing home like 20. So, I mean, gross sales are a marker, but it's not necessarily the only thing to look at. I mean, structure is lots of things. I mean, if you want to keep it separate from your personal, or if you have partners, it's better instead of a partnership, maybe to do the S Corp. I mean, there's lots of reasons why, and it's not just gross sales, but that's a great one to start with looking at.
Is it possible to switch? So we were like a partnership to begin with, and our accountant, after our first year, we switched accountants. He recommended to go to an S Corp, to file as an S Corp. But I'm finding that, because of things like unemployment and basically having all the self-employment, we're not at that threshold that you're talking about. Is it possible to file paperwork to switch back out of an S Corp, or are we stuck?
you're not stuck. There is always a way out of getting to be your S corp. But I mean, as a partnership, then you're back to paying the self-employment tax. So you have to look at whether the unemployment rate is greater than what the self-employment tax that you would go back to paying is. And honestly, as a partnership, it's probably best to file an S corp. I would always recommend that, just because the self-employment tax is 15.3% and unemployment's nowhere near that. It's usually 3 or 4%.
Right, but we always wind up basically to hit those minimums for our insurance and things like that, our liability. We wind up covering all the self-employment taxes anyway, and don't really wind up having any extra, you know, like that $40,000 gap that you were talking about, or 20,000. So I'm paying all the self-employment taxes anyway, and unemployment, and, you know, so yeah.
Yeah, I get it. There's always a way out. You can always switch before the 15th of January of any year by filing that same form that you filed to become an S corp. So there's paperwork that you can file to not become an S corp that you would just have to present to the IRS, and then continue business the way you want to do business for that year. You can't keep flopping back and forth though. They won't let you.
Yeah. All right. That answered it. Thank you, ma'am.
Just a quick follow-up on the Amazon question from earlier. I learned that the business owner was set up as an LLC, and does that make any difference? And also that they have no income yet.
Okay, that's fine. They can still take the expenses, although they don't have the income. They're still trying to have business. So, and I assume they're an LLC as a single member and not an LLC as a partnership or an S corp, I would assume.
Sounds like it probably, yeah.
Yeah.
Okay, yeah, and if they would just file a Schedule C with those ordinary expenses, showing no income, and then putting the product that they bought in inventory and just holding it.
Okay, and then they wondered, do they do that with their personal taxes or like file a business return?
No, that if they're a single member LLC, all of that will go on a Schedule C on their personal taxes.
Okay, gotcha.
And this is why we tell people not to start doing business until January 1st, right, Michelle?
No, I mean, there's lots of people that set up businesses anytime throughout the year. I mean, it's just whether or not you can get all that income in before all your expenses are outgoing. You know, some years it just is, you just have more expenses starting up or setting up.
Yes, ma'am.
Lydia, did you have a comment earlier? I thought I saw you raise your hand.
I was just going to point out two little things. An LLC is actually a legal designation, not a tax designation. I'm sure Michelle knew this, but
yeah,
I like to tell people that because it can get confusing, because it doesn't, you can have a S corp and be an LLC. You can have a sole proprietor and be an LLC. That's just the legal designation that separates you from your business, so they can't go after your personal property. And when it comes to the S corp, the IRS does say you have to pay yourself a reasonable salary. So getting to that number and making sure that you're paying yourself as the CEO of your company what would be considered reasonable compensation is an important thing too. So if you're not making it at that point yet, the IRS can take away your S corp designation because you're not paying yourself enough. So those are some things to consider too.
Thanks, Lydia.
Yep, she's absolutely right.
And just everybody give a wave and a hello to Lydia Pash. She was one of our newest SCORE mentors. She's got to do co-mentoring, so everybody has questions, call in. Maybe we can answer them for you.
Okay, so let's jump into some questions that are sort of unique to 2020. A question we got sent in was, I read something regarding a PPP2 loan of which up to 40% could be used on cloud-based technology. Deadline to apply is March 31st. And the question was, can a nonprofit use this loan if they received prior grant money last year?
Okay, so that's kind of a two-part question, but yes, there is a second round of PPP that opened up January 14th. The rules are a little bit more strict in that one, it has to be used in the same manner as your first. And your sales from a comparable quarter from 19 to 20 have to be down by 25%. So like you would compare January to March of 19 to January to March of 20, for example, and so forth. And then you can apply it at your bank if it is 25% down. This round of PPP, they say can cover, the payroll and the benefits like it did before. It can cover the mortgage, the rent and utilities as it did before. But they're also using this round to cover worker protection costs due to COVID. They also are using it to do supply costs due to COVID. And the supply cost is what he's talking about because it includes the caveat for cloud-based technology. They can use it to operate and facilitate business operations to become more with the times through the COVID. So like using the technology to use for delivery, human resources, all the billing, just to become more tech friendly so that there's less contact and interaction between people. So yes, and yes, a nonprofit can apply and get the PPP just depending on if the other requirements are met. If they've used the prior funds, they have to have used them correctly and either are in the process to have it forgiven or show that those funds are almost used up.
Gotcha. And I'm sorry, I'm going to skip around just a little bit. I missed a question from Melinda that actually is relevant to what we were talking about before, but she said she's a single member LLC and files taxes for the business as a Schedule C on her 1040. Currently pays herself via an owner's draw rather than on payroll. Has 2 part-time employees that are W-2 employees. And Melinda was wondering, would it be better for her to pay a salary with taxes withheld instead?
As a single member LLC, she cannot pay herself a salary. She has to do owner's draw if she wants to do the salary. And if feels like she's at the next level, then she can do an S Corp and then put herself on a W-2. But as a single member LLC, just as a sole proprietor, you can't pay yourself on a wage.
Okay. Does that answer your question, Melinda? Yes. With 3
Yay.
exclamation points. Okay. Okay, let's step back to the PPP. For businesses that receive PPP funds in 2020, what information do they need to have prepared for their accountant? And will any of those PPP funds received be counted as taxable income?
Oh my goodness, the PPP was a crazy mess. So at first it was not taxable, but you couldn't deduct those expenses. But then in December it passed that you don't have to show it as income and you don't have to, that you're able to deduct the expenses you used it on. What your accountant will need to know is obviously what the amount was that you received and if it's been forgiven, just to balance out the balance sheet portion of your tax return. It's not going to be taxable and it doesn't affect the outcome necessarily, but it's just as a balancing on the end of the equity and liability section.
Okay. What about EIDL funds? If a business received those in 2020, is there anything different they need to be thinking about? Are there any cases where those funds are taxable?
Okay, a fun fact. So like the EIDL, when people were starting to get their PP was coming off of the PPPs so that they had to pay those back or they were looked upon as being paid back.
Michelle, could you repeat that really quick? You cut out for just a second. I'm sorry.
So I don't know where I started, but I'll start again. So
Sorry.
the EIDL advance, when people were getting their PPPs forgiven this last year, they came off of the amount that they received for PPP. So like if you got 40,000, but you had an advance of 4,000 in EIDL, your PPP was forgiven at 36,000. Now they're saying with the new December CARES Act change that those EIDLs should be coming back to those people that got the rest of their loan forgiven as well. So that's a good thing. People can start looking for those or asking their bank, if they've seen those deposits come back through, if they paid them off. If not, they're sitting there as part of the EIDL loan, the low interest loan that can be forgiven.
Okay. Can you discuss what the employee retention tax credit is and who might be eligible to receive that credit? I'm sorry, Mary, did you have a follow-up?
Yeah, you know what? Can we discuss EIDL just a little bit further before we move
Sure.
on? Because that was a great response, but there's still a lot of different little bugs in EIDL. So I have some questions. Number one, if I receive the EIDL advance, so for my business, Borealis Consulting, I got $1,000 as the EIDL advance. That was considered a grant. Is that taxable income? Like, I haven't received anything, but I just want to verify that it's not taxable income for my business. And should I count it as income in my accounting?
That is not income. It was a loan advance that can be forgiven as a grant. So that is not taxable income. You do not include it in your income figures at all.
Okay. Thank you, because that was a question that I had and that I hear a lot as well. Is there anything within the pandemic funding that is taxable that we need to be aware of?
Everything changed to where it's all non-taxable. I mean, the EIDL loan part is the only thing that really has to be paid back. It's the low interest loans from the SBA. Everything else, as far as the stimulus, is the EIDL or the EIDL, as you call it, which I love, and the PPPs, if they're used properly, are not taxable. There is another, I got an email from the SBA a couple of days ago that if you did not receive your full 10,000 from EIDL and you have 30% less in gross salary from 19 to 20, you can get a little bit more, up to 10,000 if you reapply with them and meet those new requirements as well. And that will be forgiven as well. So basically a second round of EIDL, if you may.
Now, they did change it to where the things that you paid with that PPP funding, for example, at first they were saying, like, let's say I pay payroll, typically that's a deduction for us as business
Correct.
owners, right? Or our utilities. At first they were saying, no, since it's not taxable income, you can't deduct it. But just to clarify, now it's not taxable income, but we can claim those deductions on our business taxes.
That is absolutely correct. It is not income and you can claim those expenses even if you use PP funds to pay for them.
And this is a very hypothetical question and you may not be able to answer it, but you're probably not seeing a lot of taxes quite yet, I would assume, as we're still getting all our stuff together or waiting till the last minute, as most
You're
of us
such a funny girl. There's taxes.
Taxes are going to look a lot different for business owners this year, I'm assuming, especially if they receive that, because we received it because we didn't have the income that we typically do, but our expenses stayed the same. And our
correct.
typically is to be like this. If we have it like this year, to our expenses are still, is it really going to hurt us as business owners or on tax time? Do you know, hypothetically? Any idea?
I mean, hypothetically, I don't know that it'll hurt you. Everybody knows that it's a horrible pandemic, crazy, nothing's the same kind of year. It would hurt you if you were intending to sell your business or if you were trying to get a conventional loan because you don't have profit if you're showing things upside down a little bit. But I think everybody takes into consideration what's going on when they're looking at that. And then with the IRS, I mean, they're going to see a lot more business losses just because people are hustling, scrambling, doing what they have to do. They're at half capacity. Some couldn't work at all for months. So, I mean, it is going to look a lot different. So as long as you have your documentation that you are relying on, and you've kept all your books and receipts, I mean, the loss is what it is. It just happens.
I'm going to pass it back to Katie because I see some CARES Act funding questions that came up while we were talking as well. So Katie.
Yeah. Yeah, some good questions. Melinda said that she got two $5,000 CARES Act grants from Greene County, and got a 1099 for those. And she wanted to clarify whether that would be taxable income or not.
The CARES Acts from the local counties, and they are taxable. They'll send you a 1099. The ones from the federal and the SBA are not taxable, which is what we were talking about. But the local funds from the counties and the cities, those are going to be taxable, and you will receive a 1099.
Okay, great. And then Karina asked, what about PUA unemployment? Is that still taxable? She mentioned a friend of hers got that as self-employed.
Yes. Okay, so unemployment has been crazy, and people didn't realize that unemployment was taxable. Unemployment has always been taxable, and even the federal pandemic part of it that's added to it will be taxable. There's a lot of people that didn't hold out federal taxes on it, so that's really going to hurt a lot of people. And in Missouri, they do not hold state taxes out. So if you drew a large amount of unemployment, you're probably going to owe the state a little bit back in on your percentage that you drew. Another thing with unemployment is sometimes they don't mail you the forms. You have to go get them off of your portal where you signed up with. I know in Missouri, they mail them late, or they don't mail them at all, depending on how you signed up. And so that most people have had to go in and log into their account that they signed up in and pull those 1099s actually.
And Michelle, just to clarify on that, when you're filing for unemployment, you can choose to have taxes taken out, but you have to do it at the onset. You can't
Correct.
go back. You're like, so if you choose that ahead of time.
Yes, on the federal part of it. And they will not, I don't believe in Missouri, let you choose state taxes, which to me is odd since it's state money. But I mean, they will only let you choose the federal part.
Wow. Okay. And then Melinda also wants to know if tax season comes with Excedrin this year, but Mary thought maybe Valium would be better. Do you have any opinion, Excedrin versus Valium? No,
I mean, bottles of wine and Valium, yes.
Okay, good to know.
To be fair, the bookkeeper on here said bottles of wine. Send all your accountant friends bottles of wine. So
this is a good idea. Okay. I wanted to step back to that question about the employment retention tax. Can you explain what that is and like who might be eligible to receive it?
It was there's several parts to it. Are you talking about the employer retention credit?
Yeah, sorry, the tax credit.
Okay.
Sorry.
Okay.
Yeah.
So it was a refundable tax credit that employment taxes could get refunded on their 941s up to $10,000 from a business. These forms were used to reduce federal and Social Security taxes that were paid. It was a 50% credit from the federal government based on qualified wages of full-time employees and qualified healthcare costs and benefits and such.
Okay. I didn't know if that would apply to anybody.
Probably not the smaller businesses, no. But I mean, there are great credits for, so like COVID pay. I don't know if anybody had payroll that they had to pay their employees for COVID leave or anything related to the staying at home because of COVID part, because there was payroll tax credits for those wages that the federal would cover the wages and part of the Social Security and Medicare on them. And you could apply for those on your quarterly payroll taxes on the 941s. So if you paid somebody COVID pay, you might want to go back and reclassify that on those quarterly forms to get that credit as well. And that was part of the retention credits.
Makes sense. And I don't know if any employers did this, but employers had the option to defer payroll taxes under the CARES Act provisions. If they did do that, what do they need to be thinking about now to meet the requirement to pay those? What is the requirement to pay those now?
That was really tricky because everything fell on the employer. So what it was is the employer could decide whether or not to hold taxes like normal, or they could stop the payroll taxes for a certain period of time and then pay them in later when things got a little better for those employees. It was not an employee could decide kind of credit. The employer had to do it because they are responsible for paying in those employees' taxes. So like say that employee may not be there in this first quarter, and the employer then still has to pay those taxes in, and they have no way of recouping them back out of the employee's paycheck. So I had not seen, honestly, a whole lot of small businesses do it, because I think it kind of scared people of how much they're going to have to pay back without being able to get that from anywhere. So I really, honestly, I had people ask about it, but when they found out that they were solely responsible and not the employee, then they kind of shied away from that because the employer doesn't need anything else on them.
Right. So you haven't seen any employers that elected to do that?
I did not, no.
Okay. What if a business offered that FFCRA leave to their employees in 2020? What do they need to know while they're preparing taxes?
And that's what I was talking about. That was the 14 days of COVID pay leave, and the employers could get up to $511 per day, depending on what they paid them, but that was the max. And they can reconcile this on those 941 payroll reports. And that was where the credit came back with the wages and the taxes on those 941s as either tax credits or carry forwards for into the next quarter.
Gotcha.
And those are good through March of this year.
Okay. Am I thinking right that it's not, that it maybe was it required for certain businesses in 2020, but maybe it's not now, but there's still tax credits, or am I misunderstanding that?
They pretty much wanted everybody to do it. There was some exemptions for if you had under 50 employees, but if you did it, you were still eligible to claim those credits, even if you did it on your own. So if you paid anybody COVID pay, you could still claim those credits.
Gotcha. Okay. Couple of sort of personal tax questions, I guess. What about, I had heard that there was like a change in charitable deductions this year. You could claim where you couldn't claim before. Could you explain that? Maybe.
There's a couple of things with charity. It used to be more limited by your AGI, and they upped to that a little bit so more people could take advantage. They were trying to still keep the nonprofits, running because, fundraisers didn't happen. And that's where most of the nonprofit money comes in for their big events this year. And they just weren't happening. So they did raise the income limit. And also they put to where even if somebody doesn't itemize their taxes, they can still take a credit for charitable deductions as long as it's a monetary deduction like cash, check, or credit card, and take that as an additional expense with their standard deduction up to $300. Next year for married filing joint, it's going to $600. So you can still take advantage of that for 2021.
Okay.
Talk about that from the business. Sorry, Katie.
No,
from
go ahead.
The business aspect as well, because I know a lot of times businesses will do that donation at the end of the year to a charitable nonprofit to help bring down their tax liability, perhaps, or just because that's what they like to do. Has that changed on the business end, either for LLC or S Corps this year?
On the business end, nothing really changed with charity. There isn't any extra advantages to it. I think that corporations do it out of the kindness of their heart or as advertising. And LLCs, all of those, if they're a single member, they just take that on their personal return anyway. So it wouldn't make a business difference.
Okay. Karina was wondering if there was a good resource or link for a calendar of deadlines for required forms to file that you know of.
On the IRS.gov has great reminders, and you can have them subscribe to several of the IRS newsletters that come out, and they remind you as well. But there's also several calendars there that say, you know, this quarterly is due, this payroll tax return is due. It's all on irs.gov as a great resource.
Okay.
The state has that as well on their website.
What are
Or
any
state
upcoming
members.
deadlines that we need to know about?
I'm sorry, you cut out. Is it what deadlines?
Yeah, are there any upcoming deadlines that we need to be aware of just for filing and stuff?
Business tax returns, not LLC, like single member LLCs, are due March 15th, like they were the last couple years. The tax deadline, yay, has not changed, still April 15th. Don't move it to July again. And first quarter estimates are coming up here in March as well.
Okay. So when we first hopped on this call before everyone else was on, we were talking about stimulus checks. Since we've moved on to personal taxes a little bit, what if somebody, like, what is the change with stimulus checks as far as, like, is there a form or something if you didn't get what you thought you should get, or what's going on?
Okay, stimulus checks were crazy. They were crazy because when they first started going out, they were basing them on 2018 returns if you hadn't filed your 19 returns, and they were sending them to people just that they knew were on Social Security. So, I mean, there was a lot of fraud with the first stimulus checks just because some of those people were dead. They were sending them to deceased taxpayers. They later said, 3-4 months later, that those have to be sent back. So there was a little bit of fraud there with that. But with the stimulus checks for this year, let's just focus on that. There is a reconciliation that the tax preparer has to do. And if you did not get what you should have gotten based on the number of dependents that qualified, then you and your income limits, then you can reconcile it out this year. And if your income is down, you could get a little bit more if you didn't get full amount, if it was prorated, or if you've added a dependent this year that you didn't have on your return last year, you could get the stimulus for that dependent as well. If for some reason you got more, like say your ex claims your dependent one year and then you claimed him and got the stimulus on him, but it's not your turn, you don't have to pay that stimulus back that you already got for that child.
Okay. Mary mentioned that she'd been hearing from folks. Are there, like, unemployment fraud issues, like having to pay back unemployment? Is that anything you're aware of?
I've heard, but a lot of the cases that I've heard of are they shouldn't have drawn. I've heard it hasn't just been anybody that
Michelle,
I
you
know.
cut out. Can you go back?
I have not heard of anybody that just had to pay it back because they had to pay it back. I've just heard of cases where, things weren't reported correctly. Maybe there was some income from somewhere else that they shouldn't have drawn the amount that they drew. But those are the only cases that I've heard of personally.
Okay.
If they aren't able to pay back, say that amount, say they have to pay back, is that going to be taken out of their tax return?
Unemployment has nothing to do with the tax return with the exception of it's taxable. So the state can have you make payments back to them. If it gets too bad, they can garnish wages and stuff to get it back. But normally they just make a payment plan back with you to get that overage paid back.
Gotcha. Kay says it's their first time filing as self-employed. Is there something you know of that is like a conclusive tax filing checklist for somebody that's doing that for the first time?
Normally, if you're working with an accountant, they have organizers that they can print for you with the deductions that relate mainly to that business. There are some organizers online, that you can look for the expenses that kind of relate in your field, and then do a checklist for those. But I mean, like our business, if you've been here before, we send you out an organizer of like what you had last year and what the amount was that you claimed for that deduction last year. So if they're working with an accountant, I mean, they should be able to get one from them. Otherwise, there's some great resources again on irs.gov to give them what to look for as far as expenses.
Okay. Any other questions, just throw them in the chat. In the meantime, Michelle, is there anything else we haven't talked about that you think people should be aware of?
I would want to talk about meals and entertainment for a little bit. It's a deduction that a lot of people take advantage of, and it was cut back in the last couple years. It became a lot stricter of which ones you could deduct and how it was able to be deducted. But for this year, for 2021, meals and entertainment, or not, travel meals and like meeting meals are 100% deductible. Whereas in the past, they've been 50% deductible for certain ones. But now, like when you go to a mob group and you have a meal, that's 100% deduction instead of 50. So the meals and entertainment rules have changed a little bit. So people should take advantage of those and maybe write separate columns for like social meals versus travel meals versus strictly entertainment for their accountant, because all of those are taken a little bit different now for 2021. And that was to encourage people to get back to their local restaurants and spend some money there.
Okay. Is that a temporary change, or that's the rule now?
So far, it is just for 2021. I have not heard it extended, but it could very well be depending on the pandemic.
Wait, did you say it was for 2020 or for 2021?
2021. 2020, everything's still pretty strict based on the same rules that were in effect for 19.
Well, then everybody forget the comment that I made in there about we couldn't network. Give us 100% the year we couldn't network or go talk to anyone. No. Okay, 2021, that makes way more sense. Okay,
yes,
great.
It'll be for 2021 to encourage people to get back to their local restaurants and help those folks out that have been still at 50% capacity.
So you recommend then any of our meal related expenses for business, just really making sure that we have those separated?
Yes, and it's always good to write on there like who you were with and what you were doing, just for the IRS purposes anyway. But like I said, social meals, networking meals will be different from travel meals. But strict entertainment, like you can't go to a baseball game and deduct that still. I mean, that changed a couple of years ago. So you have to kind of separate those things for your accountant to give them some direction of where they need to put them and how much is the deduction worth.
Unless we're taking a client to the baseball game, and
then you still can't eat there.
Really?
No. Well, you can eat, you just can't deduct it.
The expensive part of the baseball game. Anyway, all right, I'll let you go.
You can't deduct the baseball game either.
No.
Is there anything else like that, Michelle?
That's really the biggest things that have changed, to just encourage the charity, to encourage people to still donate to their nonprofits that can't have their fundraisers. The meals have changed to help those businesses out. But everything as far as business expenses, nothing really has changed with that. I mean, you still need to keep all your documentation. You still have your same expenses that apply to your business. The rules with record keeping are still the same. Nothing's really changed with taxes.
We still owe them, I guess.
Yes.
Okay. All right.
Katie, I just sent you one that Patty sent to me directly, so I'll let you get that one.
Okay.
Probably probably be our last question. 'cause
Yeah, I think this will be our last question. Okay, so this person spoke with one CPA firm, and they quoted them a $250 fee just for a consultation. And they're looking for an accountant to like, how do we find a good accountant? I think is the question. Is that how you read that, Mary?
Well, I
At a
think
reasonable
that
price.
if you're looking for an accountant, you shouldn't do it during tax season. I'm just honest. I mean, if you want to have a relationship with an accountant, I would recommend sitting down with them in the summer or in their slow time where they can really give you some, one-on-one hands-on advice. During tax season, it's like madhouse and we're focused just on the task at hand. As far as picking the right accountant, you've got to find somebody that you gel with. This person's going to know your intimates. So you have to have a relationship with them. It can't be a stressful time to get your taxes done. You really have to be open and honest with this person. So if you don't feel comfortable with them, then you need to keep searching and find somebody that you do feel like you can disclose everything to.
Is there anything that someone should look for when they're looking for a business tax accountant, like certifications or experience, or that if they're brand new to this and they have no idea how to choose an accountant?
I mean, experience is always great, but I mean, there are new accountants that do wonderful jobs. I mean, I just think that they need to not necessarily interview them, but see how that business, how they approach their business. They can go talk to an accountant, and if they feel like they are going to be helpful, then go with them. Most accountants don't require you to, sign your life and blood to stay with them. So if it's not working, then it's not working. But I always look for ones that are registered with the IRS. There's a registry that the IRS has and puts out that if they're on that list, that means they're doing continuing education. They're doing what they have to do to meet the requirements to stay within the IRS's realm of good. So that's the thing that I would look for. I would also just look for referrals. Like if you know people that are in the field and they refer you to a good accountant, and if you hear that name over and over again, maybe that's one you want to check out. But I mean, there's different ways to go about it, but definitely find somebody that you can have a relationship with.
Do you recommend looking at BBB and Facebook and Google reviews as well? I know for some businesses that's a really good gauge, and then for some businesses it's just not.
I mean, reviews are reviews. There's always going to be happy and sad and mad people, and that's just in the moment. You can read those reviews, and if there's a ton of bad, I would probably shy away. But I mean, you can't put all your efforts into looking at the reviews either. BBB is a good place to start, but like I said, that the IRS has a registry that you can go and see if your accountant is on there and they've completed the education for that year that they have to meet and maintain. And I would probably start there to find some names, and then you could look at their reviews and just kind of ask around on, ask your friends on Facebook, and they'll usually give you good referrals.
We all love to give referrals on Facebook.
Very true.
We love to do it.
Just a quick follow-up to that question. What their understanding is, does that mean maybe this year they can do it via tax preparer rather than an accountant? And did we hear you say that an LLC must file by March 15th?
LLC does not have to file by March 15th if they're a sole proprietor. Some LLCs, if they're corporations, have to file by March 15th. And you're going to have to repeat the first part. Tax preparers and accountants, they kind of go hand in hand. You can use just a tax preparer, or you can use an accountant that's a tax preparer that does more of the bookkeeping part of it for you.
Okay. Mary, go ahead.
I was going to clarify on the March 15th, if they're a partnership LLC to where there's going to be Schedule Ks that have to be done, does that have to be done? It's the Schedule K versus the Schedule C that has to be done by March 15th. Is that right?
Yeah. mainly your thing to remember, anything that has a K1 normally is March 15th. And that's just so that the people that are receiving those K1 forms will be able to complete their taxes by April 15th. Schedule Cs are on the personal return already, so the filing deadline for them is April 15th. Not July. We're not doing that. I repeat.
Michelle has anything to say about it. It's not happening this year. Okay, Michelle, we really appreciate your expertise and you agreeing to do this in the middle of tax time. I think you may have just forgotten that it was the middle of tax time, and we're so grateful for that. Just really grateful.
I did
when
not
she agreed
forget.
to do it. I know you did. All right.
But thank you. I love SCORE, and this was super fun, and I appreciate all the good questions that came in. Everybody needs a great foundation and base, so find your people.
All right. Thank you, everybody. We'll see you next month for Tuesdays at 2. Bye.
Bye,
Bye.
guys.